How can I make TCS a better company and a bad investment? How can an IT giant keep making thousands of crores in net profit while retail shareholders still earn zero returns from past 8 years? I repeat, 8 सालों से zero returns by so-called TCS. अगर वही पैसा FD में डाल दिया तो अभी तक डबल हो चुका होता, right? Is investing in bank FDs actually better than holding IT stocks today? Today I am not going to bore you with quarterly earnings, operating margins or guidance figures. I am going to tell you one simple story. Are you ready? अगर आपको ये स्टोरी समझ आ गई, you will never look at IT stocks the same way again. Watch till the end. I am going to cover how I am positioning my personal IT stock portfolio and what investors and traders should actually do. करना क्या चाहिए? Imagine you run a popular restaurant for 20 years and your growth formula is extremely simple. More customers come to eat, you hire 10 more cooks in the kitchen, you cook more dishes and your revenue grows every single year. Everybody is happy. You, your staff, your customers and your investors. Then one day, a automated AI robot machines will arrive in your kitchen. Now ask yourself a question. Did customers stop eating at your restaurant? The answer is no. Did people lose their interest in food? The answer is no. Then why did your entire business model change? Because you don't need 20 cooks standing in the kitchen anymore. 5-6 cooks से काम चला सकते हैं using AI robots that can cook exact the same food in half of the time. Exactly. That is Indian IT today. Indian IT hasn't lost its global clients or customers, but old billing model, our clients pay hourly headcount diminishing. Now ask, what happens next? Your clients or customer notices this immediately and ask, boss, if AI robots are doing majority of the work, why should I pay you 20 billable hours per chef when you are managing with only 5 cooks and 5 cooks se kaam chala rahe? Then contract becomes cheaper and revenue growth slows down. Pause for a second and notice, nothing died. The restaurant का जो business है वो चल रहा है, it survived, but the underlying economy is changed forever. Alright, this brings us to our very first myth buster. The common myth, AI will completely destroy Indian IT companies in next 12 months. The reality, AI won't kill any IT companies. It kills the hourly billing rate. Enterprise clients like banks still need IT companies for security and integration. They just won't pay you not only for 20 chefs. 5 chefs can do the job of 20. Obviously, they will ask you to reduce the profit margins. Now ask again, if revenue growth slows down, what happens next? The stock market silently resets its futures expectations. Institutional investors stop paying premium like 30-40 PE multiples for a mediocre 3 to 4% growth. Hence, stock returns becomes average even if net profits stay steady. Notice the paradox. The restaurant is still fantastic. The food is still great. But as an investment, the stock becomes completely different. Right? Which leads us to Mythbuster number 2. Let's ask again, if the stock price isn't moving, why do so many retail investors still buy IT stocks? Because of dividends? Fair enough. But how I view investments is very simple. Dividends give you income. Growth creates real wealth. These two are completely different jobs. This brings us to Mythbuster number 3. What am I actually doing with my money? Let's stop talking about IT giants and talk about our own portfolio. क्योंकि खुद का पैसा के लिए खुद का पैसा देखना बहुत ज़रूरी है, right? Here is my exact framework work across the investor profiles. Case 1, already invested. I'm not panic selling. Why? Because the business did not break. The industry is evolved. If I hold, but I lower my long-term expectation to single digit, not like 15-20% growth and double in every 3-4 years. I'll not do that. Case number 2, if you are doing active SIPs, I will continue holding my SIPs, but I am not increasing my monthly allocation or step-up SIPs just because valuations look cheaper. What I'll do is, personally, I will keep my IT sector exposure capped at 10 to 12% max to downside my risk. Case number 3, if you want to allocate fresh cash, I don't ask, has the stock fallen enough? I ask, has the future growth outlook improved enough? Huge difference. And for traders, different ball game altogether. I don't predict earnings if I'm trading, and I don't predict AI. I follow price action. Simple. And in 2 minutes, I'll show you exactly what chats are saying. Let's directly open TradingView on my Mac, and no slides, no PPT, just raw price action. Look at the Nifty IT index daily chart right here. Notice this blue line? That's our 200-day moving average. In technical analysis, 200-day DMA हमारे ultimate line in the sand होती है. जब तक price इस line के नीचे trade कर रहा है, any sudden 2 or 3% green day is just a short term pullback. Trend reversal नहीं है. So the 200-day moving average is around 32,800 for CNX IT, and today we closed around 31,200. Right. Now let's zoom out. Weekly chart. Why weekly chart is important is we'll know what is the medium term to long term perspective of the any index or stock. So IT index has made highs of 45,000, 46,000 close in December 2024. After that, it has fallen from 46 to 26,000, approximate 40% fall, right? This is not the story, 40%. If you zoom out, let's go to the monthly chart, okay, of CNX IT. No, I'll rather go to the weekly chart. Here I've made some indications. There are some red lines here. If you look at the broader picture, okay, around 2021 July, it has done a breakout. You can see here, this is the breakout around 30,000 levels of Nifty IT. Then it has made a top. Again, it has fallen. It has taken the support, but support not sustained. It went back, again touched 30,000, again fallen back, again went back to 30,000, fallen back. Fourth time again it attempted in the November 22, fallen back. Fifth time it is a resistance, again fallen back to 26,000 levels. Sixth time it tried, and there is a breakout kind of a scenario. Again it has fallen down. Now whatever the resistance, it has become support of 30,000 levels. On the seventh time successfully, again it has gone up 20%. Again it tried to fall in the May 24. Eighth time again it touched this zone, 30,000 to 31,000. Technical analysis is not perfect, it is approximate. So, and after this, there is a counter rally happened till 46,000. Faring around 30 to 40% jump, right? Then this is the top all-time high of Nifty IT. Again it corrected. Again, if you see, during April 25, it took support of the same 30,000 level. Again it went up 20%, and it made some sideways movement, and again recent Jan 26 it made a high of 40,000 and again fallen. It tried to regroup back, fallen, again touched, fallen, 13. So currently we are at, if you see the closing day closing of July 31st July, it is around 30th July. Now this is the make or break zone for the Nifty IT. If further momentum continues from here above 30,000, it might again go to 40 or 45,000. We never know, because the sky is the limit. Why? Because once this trend resistance breaks, it goes very high and we never know. So this is a golden opportunity, mind you, but at the same time you have to be cautious. It has to be supported by volumes. Now the volumes are healthy as of now if you see on the weekly basis, but we need to be cautious in this zone. If this is survived, this 30,000 31,000 survives for a few more weeks, you might see one more breakout in Nifty IT. If doesn't, again it might fall back to this zone. So this 30,000 to 31,000 zone is very important. Alright, having discussed this, now आप पूछेंगे शर्मा जी आप TCS या Infosys का जगह पूरे निफ्टी IT इंडेक्स को क्यों एनालाइज कर रहे हो? Simple math है भाई. If you look at the total composition of Nifty IT index, Infosys has 30% weightage and TCS has a 20% weightage. Approximately put together, ये दोनों stocks more than 50% weightage of Nifty IT. If you pick just in TCS or Infosys, we can do the analysis, technical analysis of that also, but single stock risk अभी लेने का जरूरत नहीं है, क्योंकि क्या पता है one more client may drop off in the TCS or Infosys, or any management related news might come. It is always safe if you are a trader to save a index instead of guessing who will do the breakout, because TCS has not given the returns from 2018. Instead that you can simply trade either ITBs ETF or low cost IT index fund for immediate gains. So having discussed this, what makes me bullish again? A clean daily candle breakout above the 200-day moving average with heavy volume. Tab tak aggressive dip buying is just catching a falling knife. Fundamental theory tells us what is changing. Technical charts tell us when the market starts believing that change. और इसीलिए I use both fundamentals to understand the story and technicals to time the entry. If this restaurant breakdown gave you clarity, hit that like button, subscribe to SharmaG Insights, and comment below which sector should we analyze next using this exact framework. Keep analyzing, and I'll see you in the next video. Thank you.